evening, everybody. How are we? Welcome to this live. Appreciate you all for joining me. There are already some questions in here already. So we will get to those very, very shortly and get going. How's everyone, by the way? I have to be honest, I am not fully caught up with markets at all at the moment. There's been a lot that's been happening. Obviously, interest rates. We increased interest rates this week. Bank of England, Andrew Bailey, and the Monetary Policy Committee, the Fed. I've not even looked at any of the commentary from the Fed just yet, so I have no idea what's happening in the States right now. So I will try to answer questions if there are questions on the Fed and interest rates and all that kind of stuff with a pinch of salt, because I've not had time to even look at it. We were shooting for Channel 4 pretty much all this week. I've had one day at home. Tonight will be the second day at home that I've had, and then we're off back out tomorrow for shooting. So I may not be that much use when it comes to a load of current things that have happened this past week, unfortunately. But I will obviously give it the best go that I can in terms of answering questions. So welcome, guys. I know there's a number of you already in here. If you've not already joined the Discord group, by the way, make sure you go and join the Discord group. We're growing a good number of people in there at the moment. There's a little bit more commentary in there, a few more conversations going on in there. I will have some exclusive content that I will be posting in the Discord group first before it gets to the channel. I am behind on Naeem's asking about issue 3. I am behind on issue 3 right now, mate. It was supposed to be out. I was hoping to get it out next weekend, thinking I'll be able to get it out this weekend. It just hasn't happened, mate. So it's taken a little bit more of my time in terms of filming, traveling, location research, all this kind of stuff that comes along with it. That's taken a little more than I anticipated it would actually take in terms of my time. So I will try and get it out by the end of the month for sure, because there are some things in there that are pertinent to tax year end and the new ISA season that's coming along fairly shortly. I've got a great article in there that is all about your tax allowances, things to basically go check for. It's a really, 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 really good piece of work, basically. So I'm going to aim to get it out next weekend in terms of issue 3. But yeah, I'm just a little behind at the moment when it comes to just things in general. To be honest, I'm absolutely knackered as well. And in opposed to traveling down to location to film tonight, last week, by the way, was a big, big mistake. I think I left here after live. I left here about 10 o'clock in the morning. And I think, where were we on Monday? I can't remember where we are on Monday because it feels like ages ago now. We're nearby. Where were we in Chesterfield? Yeah, we were in Chesterfield on Monday, and that took me a few good hours to get to. Going down to Maidstone to shoot Thursday, Friday this week. The M25 is absolute joke, but there we go. Problems, third world problems. So I know that there's already a few comments in here. There were a couple of people asking questions before we actually went live, so they're not in the restream feed for me to be able to pop up on the screen. But there is a question here. Food Dweller is saying hello to everyone, and there is a question from 0161. He's saying here, I want to withdraw my capital out the markets and use it as a deposit on a property next year. But where can I put the cash for a year where it won't be ravaged by inflation? You once mentioned bonds. So you can have a look at maybe premium bonds might be a good place to put them. That will be relatively safe. I mean, you might, you'll get access to, or you'll be entered into the prize draw, so you could potentially win 25 quid here and there. But that won't have any capital risk at all, and it will be tax-free as well if you do win from the draws too. So that might be a good option for you in terms of somewhere to actually place it. You've also got a follow-up question here. Last week you said you withdrew 50k for January. Do you have fears that the cash will lose 5 to 10% of its purchasing while sat in a cash, and with March 16th over, do you think markets can rally? I'm not too concerned about the cash that I've got in sitting around at the moment, being eroded by inflation. Not really, because again, this is my opinion and this is my view. I need the money for a very specific thing in the near future. So what I'm trying to do here is basically have a look at preventing it from losing anything within the markets and potentially be in a position where I have to wait longer than I want in order for the money to recover in value for the purpose that I need it for if it was to be stuck in the market. I'm looking at options of what I can do with it. So NSNI premium bonds is one. I haven't pressed the button on that. I've just been a little bit too busy. Staking is another that I've actually had a look at. But again, I'm still trying to get okay with that. I was looking at crypto.com as a potential one. But I haven't got around to actually doing the research for that just yet. Again, because I've just been so busy. So I've not had a chance to look at it. So those are some of the things that I'm thinking about, specifically myself, for the cash that I have. But I think it's really, really important if you're going to be looking at, where you put your money. I mean, premium bonds are relatively, there's not much that can go wrong there. Things like staking, you just have to be really confident that everything is locked up and fine. Obviously, there is no financial services compensation scheme. So if anything happens to the companies that you put them with, say crypto.com, people will say, well, that's highly unlikely to happen. You're not going to have any cover, any protection. These are things you've got to weigh up. But that's what I'm doing, and that's how I view things ultimately myself. I'd rather lose a little bit of money in value because of inflation rather than lose it in the markets than having to wait for the market for it to return. At least with it being in cash in my head, I can have a look at options. I can, if I need to act early, I can act early. I'm talking, 12 months ahead is potentially what my timeline is. But if I needed to move early because I saw an opportunity, I can move early. It's very, very different than just having it in the markets and potentially having it trail off if anything were to happen to the stocks. And as of the Fed this week, I've not paid attention to it, mate, if I'm honest. So I can't really give a comment. I need to catch up. I need to catch up on a lot. Someone did mention in the Discord this week around the property market and what my thoughts were based on the interest rate hike this week from Bank of England. And to be honest, again, I've not really paid attention to the property market as such, but I wouldn't be surprised if we start to see that the property market still doesn't feel as though it's cooling down. Because one of the things that you will find when there are interest rate hikes is central banks are very, very clever. When they know that they're going to be doing these things so that there isn't a massive shock to the system, they will signpost them. So what tends to happen is, and you think about it, if you had money lying around, right? If you were an investor right now and property was what you're going to be looking at investing at, if you know interest rate hikes were coming and you could see evidence that the interest rates are being increased at a incremental periodical basis, if you're looking at a property, you're probably going to go buy a property right now because you know that it's going to become more expensive for you to access credit later on because rates are being increased. So I wouldn't be surprised if the property market at this point in time is actually still a bit buoyant because interest rates are increasing. If you've got cash, it's great. If you're an investor, it's great actually because you can get into the markets quickly. Maybe not so good if you're, first time buyer looking and biding your time, still looking to save for a deposit because it is going to be more expensive for you later on the longer you wait, unfortunately, unless we get to a point where, which most people are expecting, that the interest rates become so unattractive to potential investors that they just be like, you know what, we're going to hold off for a minute. And then you might see a call in the property market. But I mean, just looking at some places that I've been and people that I know, even properties around where I am at the moment, property prices are up big, like massive, like really, 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 really big numbers in terms of property appreciation right now. So yeah. Obviously saying here, hi P, I have a work/employer nest pension. As I add more, Nest claims tax from HMRC. I also have a private pension with Aviva. if I add additional one-off sums to Aviva, will they also claim the top up from HMRC, or is it my work-based pension that can? Both of them can, mate. So all of your contributions that go into a pension are eligible for that tax relief. So regardless of whether it's Nest or whether it's Aviva, they will both be claiming back your tax relief. So you should have it go into both of those pots because you're entitled to it essentially. All right, I think that brings me to the ones that I can kind of pull up on screen right now. Hmm, I like this one. Video views. You lot are bright and early with the comments. I think people kind of clock on that there's quite a few comments that questions that come through. So people get in early, very very early to ask their question. Hey, listen, you've got to do what you got to do, right? GT Ploy boys on here. Welcome, welcome. Snuggles, drop the link. Which link are you referring to, mate? I will drop in the Discord link actually. Bear me 1 second. So people can use that to join if you haven't already joined. Let me just find it. Let me just find it. Now, where is it? Where is it? Where is it? I don't want that one. Let's go back. Here it is. Oh, I'm going to drop that into the comments. If you haven't already joined, you should think about joining. And yeah, I've actually have to say, I had an imposter in my Discord group this week, and obviously people pointed it out very very quickly. It's just amazing that you can't have an Instagram, you can't have a YouTube channel, you can't have a Discord group where people don't try and copy and clone and pretend to be you. It's really quite. I mean, they're doing this with Discord groups now. This is absolutely crazy. And yeah, again, talking about cryptocurrencies, so on and so forth. And yeah, it's just you've got to have eyes in the back of your head. It's actually quite infuriating, but at the same time, I guess I should take it as a compliment as well. It's just a little savage, but hopefully I'll be able to get around all of this nonsense with a verification after everything goes out on channel 4, at least fingers crossed. So we'll see what happens on that front. So we had a drop a link in there. Let's have a look at this one. Pete, you're offering great value. Just checked in and a bunch of comments already. This channel will continue to grow. Take it easy, brother. Thank you very much, mate. Appreciate it. Look, listen, at the end of the day, I mean, look, YouTube is a lot of hard work. And this does lead me into, I guess, something that I've kind of realized over the last couple of weeks. I am doing 2 videos a week at the moment. Then I'm doing a live Q&A on like a Sunday evening, which is what, an hour, 2 hours of my time roughly. With me being busy with a ton of other stuff, it's definitely the pressure has definitely come to the forefront, because doing everything that I'm doing right now in terms of filming, and that's taken out a good chunk of my week, and it's time allotted to do that. 2 videos a week is a lot. It's a lot of work. So I'm actually toying around with actually going back down to maybe 1 video a week. It will probably be in a couple of months' time. Once all of the filming and everything is done, I'm probably going to take a week or so out and do nothing. And there's some other bigger content pieces that I want to do. I've been toying around for a very, very long time about making some, I guess, documentary type videos that won't be like, 40 minutes or something like that, but it will look at a specific topic in the world of finance and investing specifically. And with that, actually do it where there's a little bit of travel involved so I can indulge myself within that, but actually talk and ask broader questions around investing, finance, maybe a lot of the psychology. I don't know how much is going to be will end up in the show on channel 4, and I don't know if I can really kind of like share this, to be honest. But my approach to a lot of this is to kind of carry on a lot of the stuff that I talk about here. I think if anybody wants to make any significant or substantive changes to their financial behavior, their, I don't know, their financial life and the things that they do with their money, I think the emotion, the psychology, and the, uh, I guess, the intrinsic drivers are really, 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 really important. And I want to carry that through onto more interesting like concepts and areas of conversation rather than just be about funds and ETFs and all that kind of stuff. We'll still do some of that, but I want to have bigger pieces where we actually branch out and get and talk a little bit wider and ask bigger questions. And with that, travel, time, actually filming it, planning it, all that kind of stuff becomes a factor. So currently, with 2 videos a week, I couldn't do it. It wouldn't be possible. So it's one of the reasons why I'm thinking of going down to 1 video a week. I've already got a number of ideas I'm already discussing with Tim, who did my documentary. And we're thinking about how we're actually going to go about doing this at the moment. So it might be a change that comes later on in the year. It will probably be around about May, June, if I'm completely honest. So it won't be that far off. And I will let you guys know in terms of a countdown, in terms of, look, we're going from 2 to 1, and then maybe the live Q&As, depending on where I am and what I'm doing in terms of the suite and the production of all this video content will vary in terms of whether it's weekly or or twice a month or something like that. Depends really. But one thing that I have definitely realized is that I need to get some time back, just to be able to do some of the stuff that I actually enjoy. And it's not just work, 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 work. It's balance as well. I'm thinking about PCA in a UK equities index fund every month. Between the FTSE 100 and FTSE 250, which of these do you prefer? And which has the best chance of long-term growth? Mate, I have no idea which one will do better in long-term growth. It's a mixture of different companies. The market cap within both of those are different. And when you think about market cap can affect how quickly or whether or not um, the share price of a company increases, right? So if you're looking at this in terms of which one you should be investing in, I guess the first point of call to, or the question you should ask yourself is, within those companies, what is your goal specifically? Yeah. And then within that index specifically, are there any particular companies of interest that you think are in sectors that might do really, really well, have a chance of doing really, really well? Now, let's not forget, the FTSE 100, FTSE 250 are UK-based companies, essentially, right? So, I mean, Brexit is still an issue, although it's gone off the boil here. There is people think that there is a lot of value in the UK market specifically for long-term growth, but you do have to look at it from a I guess where it is right now and where you think it's going to go in the future, and what level of exposure you're going to get to the sectors if you have a particular sector that you're interested in, um, within those two groups right there. So the FTSE 100 will be, the top 100 companies. The FTSE 250 are the next, well, the 250, right? So you've got an additional 150. So the top 100 will be large cap. You might find some mid caps in the 250 as well. So you got to think about it, right? If you have a look at a company like Barclays, for example, if they do turnover £1 billion every single year, their share price and their profitability might only move a little bit because they're a big company. But if you find one in the 250, for example, whose market cap is much smaller, £1 billion in turnover is huge for a company like that. And that should then, as long as they've got good controls over their cost, mean that they have profit. And with profit, you should see, hopefully, growth in the share price. So it really depends on what companies you're looking at. But I think if you're going to pick one, do it off research. I can't tell you which one you should pick. I think that there's potential in both of them to do really, really well. I think if you want a little bit of stability, you may get a little bit more stability in the in the FTSE 100 than you will do the FTSE 250. The FTSE 250 will still be a little bit volatile, but if you're okay with the volatility within that, by all means, go for it. But yeah, you've got to do a little bit of research on what's in the 100 and what's in the 250, then decide based on what your investment goals are from there. Naeem, how you doing, my man? How was your week? Looking at your LinkedIn, looks quite busy with shooting. When is your magazine coming out? Yeah, so I kind of answered this, mate. Yeah, hopefully it's going to be out next week. I hope, mate. Next weekend. That is going to be when I'm going to aim for it. But yeah, this week has been extremely busy. Really, really busy. I mean, last week was like the week before. I think this week it just went up a little bit of a notch. And then next week, so from tomorrow, again, I'm rushed out. I cleared for the last month or so. I haven't done any coaching calls at all, to be honest, because I've just been trying to make room for all the other stuff that I've had to do. But yeah, it's been good though. I've enjoyed it. Let's put it that way. It's been very, very, very eye opening. And yeah, meeting lots of really good people as well, and just soaking in a lot of the practices and the processes, and it's been a massive learning curve. Let's put it that way. It really, really has. I actually messaged someone. I had when I knew that I was going to be doing the show. Um, I did a live last summer, and I don't know if anybody remembers this. Actually, it wasn't on the channel, but we did a workshop in the summer of 2020. So it wasn't 2021. It was in the summer of 2020. And we were looking to raise money for the Manhood Academy. So the Manhood Academy it's a brilliant, brilliant academy in London. And they work with street kids, basically. And the reason why I did this, because in 2020, if you remember, obviously Black Lives Matter happened and all that kind of stuff. One of the narratives or the counter narratives that came to light, which really annoyed me, was black people and people who look like me in inner cities are all about the knife crime and all this kind of stuff. You kill yourselves, so you should be sorting out your own problems before you start blaming the police. And it's like, okay, you can say that, but really, how is that related if you think about power dynamics, right? Power dynamics don't come into play here, so it's wood through the trees. But anyway, one of the things that I did in response to that was I thought to myself, obviously I don't have any experience going in, on the streets and working with young people. What I can do is I can use my expertise and my knowledge to pull together a group of people. We ran a finance workshop on obviously investing in the stock market, trading, property, all sorts of stuff. We had, through the day, I think it was probably about 4 or 5 speakers. And one of the speakers that I got on for the business segment was Paul C. Bronson. Now, Paul C. Bronson, if you watch TV, he's done Celebs Gone Dating, Married at First Sight. He's really, 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 really big in terms of, and he's such a cool dude, man. He's so, so, so cool. And when I knew that I was going to do Channel 4, I still had his number. I reached out thinking, yeah, he's not going to remember me or anything like that, or he's not going to respond. And he did. He responded. And I had a call with him, and he said something, and I messaged him yesterday. I WhatsApped him yesterday to say thank you. He said something to me, and I didn't know what he meant at the time. I was like, I don't know what you mean by that, and I didn't want to ask the question of what you mean. I thought I'll find out on my own. And what he said clicked last week, made 100% sense, because I was in the context to actually understand what he was saying. And it's really, really weird. And it kind of leads to a lot of the stuff that we talk about here on the channel. Like, a lot of the time you're taking in a lot of information, either here or on other finance channels on YouTube. And sometimes it might not make any sense because you're not in that environment where the context applies for it to make sense. But then you have this eureka moment, this light bulb moment where it's like, I get it now. It was kind of like that, and it was really, really cool. And yeah, man, it's been very, very interesting. It really, really has. And I've met some great people, man. Some really, really good people. I've got a behind the scenes video that will come out maybe in a few weeks' time. I'm gonna show it to the Discord group first. But yeah, that will be on the channel when it's ready. And it's been an amazing experience. It really, really has. And hopefully there will be more. Who knows? One thing to learn about stock market, depending on what platforms you are using, you must put a stop loss on. The falling knife can be hard to watch. Listen, I obviously did the video about oil, like something to avoid. So what was happening with oil? So I think it happened with oil, and I think it happened with wheat, but I noticed it specifically with oil. People going on to trading 212 and places like that, and basically taking out like obviously trades on oil using leverage, and they may or may not have put a stop loss on it. And like the crux of that story was basically like, just be careful. Like if you're going to do CFDs, you don't have to use leverage. The platforms can be guilty or they can be accused of making it way easy for people to use leverage. And yes, you go through the questions, but the questions aren't particularly hard to get past. They make it way too easy. And it was funny because obviously the comment that I pinned to the thumbnail of that video was a prime example of someone who probably watched something online and thought, "Oh, oil prices are going up. I'm gonna CFD it," and just didn't do the proper checks and stuff. And so it's really, really, really important to pay attention to the detail when you're looking at this kind of stuff. I mean, I don't know what's going on with nickel, but I think it was about a week and a half ago, nickel was going absolutely crazy, and they halted trading on it all of a sudden. And I don't think it traded for a while. Actually, I think it was halted for a couple of days. Then it was brought back in. But yeah, you're right. You know, if you're going to go do CFDs, make sure that if you are leveraged, you're leveraged at an affordable amount. When I mean affordable, amount that you're happy to leave yourself exposed to, and make sure that you set a stop loss. And if you are of the ilk that you don't mind, you know, just having a punt and you've got a target, you can put a profit take action on there as well, or you could do trailing stop losses as well in there as well. But make sure you do those for sure because things can turn very, very quickly. Andy's on here. How you doing? How you doing, mate? Yeah, you always remember to do to remind people about this. Yeah, but if you've not hit the like button just yet, make sure that you do. Um, this is an update, so I didn't know this. So I've not caught up with anything. So Fed hiked 25 basis points, only too little, too late. I can recall. Do you think inflation is here now for a good few years until 2025? See, I'm surprised by that. See, this is the funny thing. One thing I did notice was the inflation numbers in America came out. And I remember reading an article about this, and I watched a very, very brief video. I think it was like a week, it was the end of last week. And I remember them saying inflation numbers are on target. And honestly, it's like polishing a turd. Honestly, it's like inflation is already over 3 times your target. And you guys are rejoicing, saying that you're in a good place, that inflation is on target of where you need it to be. And I think the number was 7.8%. It's absolutely insane. And that is a prime example of when politicians try to use positive spin, positive language, not to panic the public, right? And you know, the Fed increasing at 25 basis points, that right there, for me is a cop out because I understand the dynamics of it. If you went 0.5%, the markets are going to react, but you need to rein inflation in. Inflation is already three and a bit times higher than your target. So you had to do something. I haven't checked the detail just yet, but I'm surprised at that 25 basis points. And I wonder or not whether they have actually put in more interest rate increases over a term than what they previously did. I wonder whether they've adjusted their plan in any way, shape, or form. But I'm surprised at that. Very, very surprised. But at the same time, I can understand that they'll be panicked about what the reaction would be. But then this is where the Fed will often say that their job is not to make sure that the markets are, you know, their job is not to prop up the markets. The markets are not their concern. Their concern is the economy and the financial system. And the financial system isn't just the financial markets. So interesting. Thanks for that though, mate. Because yeah, that's a little bit of news that I'm picking up this evening as well. Is it okay just to hold one fund? Yes, if you're happy with the fund and you know that and if you think that you've got diversification within there, then yeah. At the end of the day, mate, it's all about whether or not you feel comfortable with what you're holding. Okay, so the VWRL, it's a few thousand companies that it's got in there. It is a globally diversified ETF, so you're going to have good diversification within there. Is it the right thing for you? I have no idea. But if you're comfortable with right how it's invested, what it's invested in, and you're in it for the long term, you're happy with the volatility, then yeah, just keep monitoring it, so on and so forth. But you don't have to have like 10 different funds in order to have a diversified portfolio. That's not true. Yeah, I heard this on the radio today as well. Yeah, because they got rid of 800 staff, and the way they did it was really, really messed up. Like really, really messed up. And I understand that sometimes companies feel as though their back is, shoved against the wall and they've got no way out. But boy, oh boy, oh boy. I mean, if they did that to you as an employee at the end of your contract, imagine what they must have been like to work for. I mean, I would hate to think, and that's an assumption. Obviously, I don't know, but if they could go to that length where they're just like, you guys are fired and you're on a Zoom call. I'm sure they did it on a Zoom call. Then they had people on the boat, and the new staff were waiting for them. That's a horrible way to do it. That's really, really, really bad, and just a great way to get really poor publicity as well. I've just skipped a ton of questions, so let me just find where I was. This is a good question. Is the Internet of Things and artificial intelligence the future of jobs in the coming decades? I think it will have a role to play for sure. For sure, it's going to have a role to play. And this is where people will start talking about the fact that there should be a universal wage. But then the question is, how does that actually get funded? I mean, people float ideas that, if a company is going to replace their workforce, so for example, manufacturing plants where it is possible to have bots go around and I guess manage all of the orders and move things around the warehouse, then ideas like governments will tax those companies on the productivity of those robots, and that tax will be used as I guess, a supplement to a universal wage. The issue that you have with a universal wage, though, is that now if everyone's on a universal wage and they're not having to work for it, well, potentially what you then do is you increase spending, which then means that inflation then rises, and you've got to think about the whole equation with interest rates and so on and so forth. I think it will have a massive, massive role to play in the coming decades for sure. I think it's almost inevitable, really, to be honest, because there'll be certain jobs that robots will just do better, and there are so many industries that it's being tested in. I mean, I was reading something a couple of weeks ago. They were saying that in the medical field specifically, that they're trying to get AI and robots to be able to run medical tests, so screening for things like cancers. And what they were basically saying was that the productivity that you can get out of it and the efficiency and the accuracy that you can get out of it by having it automated and designated to an AI is that you get way more diagnostics in a short period of time compared to if you had a human person looking at that data. The decisions are quicker, more accurate because it's artificial intelligence. Now that obviously has its own risks, so on and so forth, but that's just one application in the medical field. You think about all of the sectors altogether. I mean, there's a ton of jobs that potentially end up on the floor as a result of that. I don't think we're going to be able to avoid it though. And this is where people like, Kathy Woods, they're investing in these sectors right now, like AI, tech sectors. That's what she's invested in because she believes it's going to play a big part in the next 5 to 10 years. So if people are invested in things like, the ARK ETFs, which have taken a little bit of a hammering recently, admittedly, right? But you can never go into this kind of stuff without it going up and down. So it should be expected. But that's what someone like Kathy Wood is invested in because she really believes it's going to play a massive, massive part. You think about genome sequencing and all that kind of stuff. It's huge, absolutely huge. In your opinion, what's the best platform slash way to invest in index funds and individual stocks? It really depends on your approach, mate. So the way I normally position this is to say, right, how do you actually want to invest? And what's your capability in doing this as well? So you can come at this in two camps, right? You can say, right, if you're, let me see if I can get this to work, and I'll actually draw this out. One sec. Um, I need to fire this up as well. Let's do this. Will it work? Will it work? Be good to me. There we go. Awesome. All right. Um, let's get rid of this. Let's get rid of this one. Bear with me a second. I will share this with you in a minute. Window, we want this one. All right. Okay, cool. So the way I always approach this is to say that effectively there are two kinds of people that want to invest in the stock market, right? So you either have the DIY camp over here, or you have, you'd rather just, what am I doing here? Yeah. What am I doing here? One second, guys. Don't want that. Let's get rid of that. Cancel. Right. Bear me 1 second, guys, while I try and sort this out. 1 sec. What's it doing? Okay. Are we here? Are we here? Right, let's do it this way. Okay, cool. All right, we're back. All right, so you're either in one of two camps, right? So you're either in the DIY camp right here where you want to do it yourself, or you want to basically just delegate this out. Now, if you're in the DIY camp, then it's really, really important that you basically understand, if you are going to be picking individual stocks, you need to be okay with research. You need to be okay with, management. Yeah. Because when the markets go up and down, obviously it's your responsibility to make sure that your portfolio is risk adjusted and it's built to be able to withstand the market volatility. You're making decisions actively. You need to be able to have a look at it on an active basis, constantly making decisions and calls on what you're going to do, whether you hold, whether you buy, whether you sell, so on and so forth, whether you trade certain things. So within this, you need to have a certain level of, education or understanding, right? And that may take a little bit of time to acquire education, understanding of what you're actually doing. Then you have, obviously, you need to have the time as well to be able to do this on the DIY side. Now, if you're on the delegate side, you probably don't want to be you don't want to do any research, right? You don't want the responsibility of doing any management. You don't want to be doing any of that. You don't want to have a look at any active response. You probably have no time whatsoever. You're probably quite busy. You might have a business, family, career, whatever. You just don't want to be doing that on your own. You may not feel confident in the knowledge that you'll be able to do this effectively and efficiently on your own. Okay. So two camps. So if you're in this camp right here, there are lots of providers that can help you, tons of them, right? If you are lucky enough to have a trading 212 account, you can go and open a trading 212 account. You've got free trade that will help you. You've got eToro in there. You've got the likes of Stake as well, right? What else? Who else have you actually got within that camp? I'm just trying to think if there's any that I've actually missed off. But there's quite a few. Those are just four right there. Now, let's just assume that you're in this camp right here. Then probably what you want is someone who can actually manage. I write like a doctor, guys, so hopefully you can still see this. You want someone who can actually manage the investments on your behalf, essentially, who's going to do all of the work. You don't have to worry. I have to add actually as well that because within individual stocks and ETFs, so let's go back here. So on this side, before I actually get lost within this side, yeah, you're also going to be in the position where you're probably going to be buying stocks, ETFs, index funds. You're making all the decisions and the purchases on these things specifically. Over here, you're essentially concerned about maybe delegating the money to somebody who's going to, invest in ETFs, index funds for you on your behalf. They build a portfolio. They decide what ETFs or index funds they have within that within the investment for you. So you're delegating the entire investment choice and decision, the process over to them. Within the DIY category as well, I would probably put in here InvestEngine as well. Also, if you're looking at ETFs, you've got Vanguard, you've got Hargreaves Lansdown as well. Who else will I put in this camp? Those are a good few, right? Now, over here, because you're looking at a managed portfolio, you've got the sponsors of this channel for the next few months. Wealthify is a good option for you there. Well, I did a review of them in 2020. If you ever took my investment course, they were the ones that I kind of said is a great place for you to begin because of the way that they lay out the information. If you're in this camp, you're probably just starting. You're not really too confident in doing all of the research and stuff, and you just kind of want to know that you're going to be in good hands. And I put them as one of the preferred people on my course. I actually wrote a guide after people took their investment course for beginners on how to actually open an account with them. At that point, they weren't sponsoring me. I had no communication with them at all. So you got Wealthify. But within this camp, you can also put the likes of, do that right, Money Farm. You can also have the likes of people like Moneybox and stuff like that in there as well. You probably have who else? Who else would I say falls into this camp? Yeah, those will probably be the three that I would say. The ones that I reviewed anyway that I think are really, really good. The top, though, I would say would be Wealthify and Money Farm for me, would be the two that I would pick out in that account. So it really depends on where you basically are and where you find yourself as an investor. If you want to go off and do it yourself and you're confident you've got the knowledge and all that kind of stuff, then you're going to be here. If you're not, then you're going to be here. So just a list of potential suitors for you there. Right, where was I? That was Jake's question. A documentary on finance or financial goals sounds great. I love hearing other people's experiences and seeing how they manage with budgeting, shopping bills, work commitments, future plans. Great. That's interesting to know, actually. That's really, really cool. The topics that I've got lined up, I mean, they're really, really fascinating. Obviously, I watch a lot of videos and documentaries and stuff. And I found something out that I was like, that can't be right. And I'm really, really interested to explore. Number one, why we can't do it in this country and why we don't do it in this country, why it's so different, and why another country is able to take such a radical approach to the way they utilize country capital is the way I'd say it. It's extraordinary, and I'd love to get into the mix of what that actually means, but actually from a not just the overarching concept, actually think and try to explore what the people in that country actually think about it. It's incredible. It really, really is. I don't want to give too much away because it will make a really, really good documentary when we get around to actually shooting it. But yeah, that's really good to know. Puts our country to shame. Let's put it that way. It really, really is because they thought so radically about it, and it's completely and utterly. It's brilliant. It's excellent, in fact. Right, let's get on to the next one. Rachel, hi Pete. What's your opinion on junior SIPs? Are they a good option for junior cash and ISA and stocks and shares ISA? I will not be maxing out cash ISAs, cash and stocks and shares ISA allowance, but looking for a long-term option. Okay, so I'm guessing this is for your kids, right, Rachel? Um, right. So there are fundamental differences, really. I mean, look, one of them is a pension. One of them is an ISA. So with the junior ISA, the key thing to remember is with the junior ISA, your children will have ownership of that money when they reach the age of 18. So, money conversations with them is really, really important to prepare them for the fact that they're going to have ownership of however many thousands of pounds that you manage to acquire for them within that junior ISA. Um, a SIP is slightly different. It's there for, I guess, a much much longer term point of view, but can be a great tool to really set your kids up for later on in life. I would say though, if you're not, it depends what your plans and what your desires are for your kids. I mean, I don't know how old your kids are in question here, but if you want to have a provision for maybe like university fees, or you want to have a provision for maybe, I don't know, so that they can have a house deposit, for example, then the junior ISA might come in handy because of the time when it's going to be available. And as long as you've got a good relationship with your child, with your kid, and you're able to have those conversations with them to prepare them for the fact that there's going to be this money and this is how you want them to use it, then it could be a better place to go. But with obviously, SIPs, you're looking more kind of like long term. I would say though, because we are close to the end of the tax year, try to, may not be able to max out all of your ISA allowances, but try to get as much as you can in there, is what I'm saying. Because anything that you don't use, you will end up losing. You can't, go backwards and retrospectively use your ISA allowances. I will do a video where I will talk about a checklist for the end of tax year. So it will give you a few things around your allowances, some accounts, just checking whether you've used them all. It will be very, very useful for those of you who I know who run your own businesses, because on the pension side, there's lots that you can do in terms of carry forward. And if you have a business that's successful enough, you could put a lot of money away. So I'll do a video. I'm aiming to have it. Where are we right now? We're at the 20th right now. Next Sunday is the 27th. I'll try and get it out maybe next week, the beginning of next. Just that will go through the checklist with you and stuff. But if you can, try and put as much as you can in the ISA, because if you don't use that allowance, you will effectively lose it as well. One second, guys. The chat thing is really playing up. As a new comment comes in, it throws me down to the bottom, so I keep losing where I am. Naim's asking on interest rates here. Yeah, the bank rate here is 0.75% now. It's the highest it's been for a good number of years now. You're saying UK seemed to follow US. As soon as I heard them increasing, then I had a rough idea that the Bank of England would do the same. Thanks for reading. Yeah, I mean, generally speaking, the Bank of England kind of takes its kind of cue from the Fed. It's one of the reasons why they waited so long for the first interest rate hike, because they wanted to see. I mean, it's one of those situations where there's a saying in the investment industry that if America sneezes, the world catches a cold, because they're the dominant economy, dominant marketplace. Really, most people take their cues from the Fed, essentially. What's your opinion on long-term drip feeding, two to three times leverage ETFs with a portion of hedged assets such as government bonds with frequent rebalancing, especially as someone who is young? Yeah, I mean, look, you're talking a leverage ETF there, so as long as you've got a sufficient hedge, or you feel as though you've got a sufficient hedge, government bonds can be a good one. But you just need to make sure that you get the balance and everything right between it. But yeah, if I guess there's a ton of those in the likes of Trading 212 that you can actually go and get. And I think in free trade you need to have the paid account to access that kind of ETF. But there's a ton in Trading 212 that you can have. Obviously, because it's leverage, it's slightly higher risk. But if you are young, you can afford to trail that out. The big thing is that you don't overexpose yourself. That's the biggest thing. And if you think that the hedge is going to work, government bonds, like I said, are good. You rarely see government defaults. So yeah, could be a good approach for you. Food dwellers asking again, please hit the like button. Thank you very much, mate. Um, yeah, he's just saying he's adding on here. He's well over 40 years to invest. I'm only talking about long leveraged broad market ETFs, not invest. Oh, good. Yeah, you'll be fine then, mate. Edna, I'm good, Edna. How are you? I'm really, really good, thank you. A little tired, but there we go. As the minute I come off this, I'm probably going to go on Warzone for a bit and veg out. I literally got a car coming for me tomorrow morning. And listen, because it's been so freaking crazy, I try to keep my hair like really, really tidy. My hair's a mess right now. So I'm gonna have to frantically try and find a barber. I messaged my barber. He's completely booked. I'm like, dude, can any of the boys in the shop like fit me in at like 9 o'clock? Because I just need to get a little bit of a tidy up. Because I don't want to go like this and be filming and then I look like an absolute mess. And because we're shooting hour long episodes, it's going to cut between scenarios. So I want at least want my hair to look a little consistent and not just kind of like disheveled in one of them, like it is right now. So yeah, it should be good. Hmm. Yeah. Okay. So this is the thing, right? If you do go for things like your junior ISAs, this is a big concern for a lot of parents. Like you can try your best with children sometimes, but sometimes it is out of your hands. And if I've certainly seen clients that have had their kids come into quite a bit of money, and and really the fear is what they're going to do with it. God forbid. And I've seen this a number of times. Kids get a load of money. Obviously, they run in their social circles. As parents, you don't always have full visibility over their social circles. If there's drug and alcohol involved and there's money coming in, that money then potentially goes on drug and alcohol and all that kind of stuff, substance abuse. It can be a really, really tricky thing to navigate as a parent. And I know wealthy clients are privileged enough to be able to put things in trust and put certain stipulations on, we've got this money for you, but if you don't achieve this, or this, or if you do this and this and this is what's going to happen. In a junior ISA, you're not really going to have that luxury of being able to do that. So, I mean, the conversations and about money are really, really important. Those conversations are better started at a really young age. I mean, you can still get them, if they're sort of like 10, 12, 11, 13. Um, but will it really, are they going to take it in as much as they would do when they're young? I mean, the research papers show us that um, financial habits are formed at the age of 7, like 7. Everything's already locked in at that point. And then you go through life and it's a validation of those things that you've locked in. So it can be difficult, but it's really, really important to have conversations with kids about the money and trying to teach them and get them to understand the value of it and the fact that if people are paying into this, that people worked hard for it and they want you to do the best with it. It's a really difficult thing to broach, but it needs to be done because if you're looking at junior ISAs and not SIPs, they're going to come into that money. They are. Can I recommend a good platform to use for options trading? I don't options trade myself, mate. So not really. I mean, you probably want to have a look at people like IG, for example. It's not something that I do, so I can't really say that this will be the best platform because of experience using them. If I do trade it here and there, it's not for any big amounts of money or with any specific detailed strategy. I'd pretty much just be doing it because you know what, and maybe I heard a little something, and if it's like you go and do this, but maybe look at people like IG, for example. I love the fact that every time we're on here, you guys actually talk to each other, like Food Dweller and Edna speaking here. I love this. I really, really do. What do I think of InvestEngine? InvestEngine are really, really good. I've done a couple of videos on them here. Being able to access the Vanguard ETFs a lot cheaper than you can get them in Vanguard specifically because they don't have the platform fee is really, really good. Yes, they are one of the newer providers that's out there. And currently, I think they're still doing a £25 bonus if you sign up. So the video you want, it will have a link there as well, is going to be the one that I posted on. Let me see if I can find it. I need to come all the way to, actually, this is my live library, right? Uh, mhm. Okay, yeah. So it was the one on February 1st. That's the video that you probably want. It will take you through kind of like how they're cheaper than Vanguard. And I explain and give examples of the ETFs and show you where the savings are. They're very, very good, very, very good, but they are new. They are a new business, and a lot of people will be concerned that, are they a new business? So could they disappear? Could they go bust? That you do get coverage under the Financial Services Compensation Scheme, so that will at least protect you up to 85 grand of your money if you were to use them. But yeah, you can use the link that I have there. They're doing a £25 sign up bonus and stuff, but they are good. All right, Edna, I hope you're okay, mate. I hope it's not COVID or anything like that as well. It's funny, right? We've gone quiet on the whole COVID front. I was speaking to someone from Hong Kong, and apparently, like, you go out to China and stuff, and in Hong Kong, like, they're still battling really, really badly with COVID. The guy was saying that, in Hong Kong, if you're in a block of flats and one person has COVID, the whole thing locks down, and then you who has COVID has to then go to a quarantine location. And like, meanwhile, we're here like it's never happened, like it was never a thing. So I hope you're okay, and it's not COVID, and I hope it's just a normal cold and stuff. I know something is going around at the moment. Thanks for this, mate. Trust me, it's not good. You can't see it properly, or maybe it's just me because I know that it's not. I'm not properly like lined up or anything like that. But yeah, because I'm going on. Obviously, it's TV, so it's like it picks up all of the details, and I just want it to look. I want the look to be consistent through the episodes. I think it would just be really, really weird if you're watching one episode, then all of a sudden I've got my hair is really tidy, and then the next it's like it's an absolute mess. So yeah, cheers for that, Edna. Oh my god, I love this question, my man. All right, okay, cool. Let me tell you a little story. When was this? This was in 2000 and this was 2012. Was it 12? It was just before I started to work in Canary Wharf. I actually worked for a brokerage that sold carbon credits, right? Went through a whole recruitment process, thought, okay, cool. These guys are talking about cash and how much money you can make, 4 grand a week, 5 grand a week. I was like, okay, I'll have a bit of this. Like, I'm up for this. Went through the interview process, which in hindsight was not really a legitimate interview process. It was very much like who can swindle and sell a dead pig to I don't know, to a butcher, right? Got through naturally because I've got gift of the gab and everything like that, right? I was great. Started and carbon credit. So call center, pick up the phone this person, and the script was very like it was very Wolf of Wall Street. Like it was literally Wolf of Wall Street, and this is before Wolf of Wall Street came out, right? Very Wolf of Wall Street script. After about maybe 2-3 days, I'm like, hang on a second. So we're selling these people carbon credits, right? And we're saying that we're going to guarantee them like 10% a year, 10% minimum, 20% roughly a year. I'm like, okay, cool. So what's my commission rate, by the way? yeah, you get 30% commission. So I'm like, okay, so if I get, a customer to give me 10 grand, I'm getting 3 grand from my own pocket, right? Okay. I'm like, cool. So we're going to give them 10% return, but I've just taken out 30%. So how are you going to give them their capital plus a 10% return in a year's time? Obviously, me asking questions isn't a great thing. But here's the spiel, right? So this is the script. In this script, the idea of the carbon credit was it was being bought from an exchange in Brussels. And the whole point of a carbon credit is that you're able to offset your carbon emissions as a business. But as individual investors, buying up these credits helps companies offset these emissions, right? It's all very fugazi fugazi, like literally fugazi fugazi. Anyway, I lasted there probably about maybe 4 or 5 days because I was like, this is just, it's nonsense. It's absolute BS. I walked out. And obviously in the recruitment group, there were a good number of us. Like, and I was like, dude, like seriously, think about it. You're taking a 30% chunk of 10 grand, 3 grand. They're promising someone 10%. There is no way this flies. Anyway, a lot of the boys stayed. They're like, oh, it's cool. I get a phone call 2 weeks later. Oh, yeah, they just rocked up to the office one morning. Everything was empty. So invested in carbon credits, dude, be very, very careful. I don't see how, since 2012, they've been able to legitimize this in any way, shape, or form. I would love to hear the sales pitch that they're selling you right now, because if it's anything like what I've just mentioned there around, oh, they're buying these things from an exchange in Brussels, it's there to help offset, carbon emissions for a better, greener world. I promise you right now, it is absolute nonsense. If they're promising you kind of like a known return, it is absolute nonsense. So please, please, please be careful. I can say this with confidence because I've been in one of those offices where they were being sold. And trust me, back in 2012, people were lapping this stuff up, lapping it up. And guess what? When the company disappeared, they walked away with their money. The head guy, who was like the one who managed the floor, and trust me, this floor, it was by Monument in London, right? This floor had about 25 dudes, like young dudes, selling this stuff. And you would see that they will get into people, never take no for an answer, wear people down on the phone until they said yes. Everyone took a cut. So your cut as the sales rep was 30%, but the guy who ran the team, who ran the floor, they would take a cut. His boss would take a cut. So actually this 10 grand that somebody puts in, you get 30%, but by the time everybody else takes their cut, it's more like 50% of the money is gone. And you're supposed to get 10% return on your 10 grand investment. Dude, it's bogus. It's absolute nonsense. So please be careful. I do not know of a legitimate way to invest in carbon credits in 2022. So just be careful. Little story time for you there. Thank you, Mills. Appreciate you. Thank you very, very much. Naeem, regardless of what change you make to your content, everyone would accept it respectfully. Thanks for these suggestions. Certainly making people financially literate and investing wisely like me. No, I appreciate it, mate. Look, it does come a long way, but ultimately, I guess coming out of the pandemic and everything like that. So my channel did really, really well through the pandemic, obviously, because people are looking to invest money and stuff like that. I have seen a market drop in the views since coming out of lockdown. It's just natural, right? I guess people get busy with other things. There is a huge part of me that wants to kind of go with what I know will get views, with a lot of the clickbait stuff, and talk about things that I know will get views. A large part of me doesn't want to do that, though. I mean, I do look at other channels, and other channels are getting 1,000 times more videos than like views than me. 40,000 videos, 40,000 views a video, 20,000 views a video. I mean, I average 500 to 1,000, maybe 2,000 a video, right? If money was the main driver for me doing this, I wouldn't be able to do this. That's just the fact. And if I was chasing money and that was the main factor, I would have to make those videos where it's a bit more clickbaity to get the views. And to be honest, with 2 videos a week and the hours that go into it, at the moment, the views aren't worth it, are not worth the return that I'm getting. And I have an hypothesis around why I guess my views are less than other channels within the space who do more clickbaity stuff, and some of them actually don't do clickbaity stuff. They're actually quite good as well. I have an hypothesis as to why people don't tend to look at my videos as much, aside from the fact that I don't generally just talk about, you can make quick money here. Number one, I'm very, very conversational. Someone was saying to me the other month, saying, you should make it a bit more entertaining with B-roll and all that kind of stuff. It's like, yeah, I can do that with some videos, but the channel is called The Conversation of Money. It's therefore conversation. So it's conversations that I wish that someone had with me when I was 20, 24, 25. So the conversational side is always going to be there. Some people may find it boring, which is completely fine. But then I'm not after people with short attention spans. The other thing, and this is the big thing, is, and again, I think this is maybe social media, and I could be wrong, but I do think it's a factor. It's the fact that I do work with brands. So many people don't like the fact that they're seeing this right here, right? The amount of abuse that I get for having Wealthify sponsor my channel, like people will message me and stuff like that, and talk absolute nonsense. And it's like, well, at the end of the day, I'm putting a large portion of my time into YouTube for people to watch for free. And I give my time up on a Sunday evening like this for free, never asking for anything in return. I'm not asking people to pay me. If people want to work with me on coaching, yeah, I make money that way. But coaching is very time ineffective. It's very time consuming. So, there's limits to what I can do there. Working with people like this who find me and like my message and see the consistency in my message is how I keep things afloat. I think because of the age of social media and the perception of what YouTube is, I think there are a lot of people that get turned off by this and by automatic default won't watch because they'll feel as though they're going to have some marketing spiel rammed down their throat, which I completely get. But at the same time, it is the balance for me as a creator being able to understand, being able to come to terms with how I actually keep the lights on, keep myself financially viable, whilst doing what I want to do in educating and empowering people when it comes to the knowledge that I've learned over 16 years and put thousands and thousands and thousands of pounds into research and training and time and hours and blood and tears to be able to do this on YouTube. I don't know whether that is the case, but that is my hypothesis of what I think is going on, having a look at it. And I will have to pivot, go down to one video a week, because it means that I will have more time to go off and do other things if I want to go do them, essentially. And that doesn't mean that I'm going to be stepping away from YouTube. But one thing that the opportunity with Channel 4 does set up is the potential for me to do more TV work. And, I'm thankful because at the end of the day, regardless of how I look at it, and this is one of those situations where, in the back of my mind, whilst I'm human and I am quite competitive, I've been very, very competitive throughout my career. It's like my career has been built on being the best person in the room. Like nobody outworks me on the telephone, on the work desk. Nobody outworks me when it comes to things that I have to do. Like if there's a leaderboard, I have to be in the leaderboard. So that human part of me, that competitive side of me, part of me looks at other channels and thinking, why do I not get that level of views? And I feel discouraged sometimes in terms of like, why should I even make this video? Why should I spend, 4 hours recording a video, editing a video and putting it out there if nobody's going to watch? But at the same time, other channels that are getting, 20,000, 30,000, 40,000 views, they're not asked to go on to TV shows and to be an expert on a financial show. And so I've got to take the good with the bad, and I have to try and step back and try to look at it for what it is. Yes, from a sustainability point of view, I can't continue to have the same level of interaction on the videos because then the equation of the time and the effort doesn't even compute. It just doesn't work. But at the same time, I don't want to stop doing what I'm doing. So I have to find a way to make that work in some way, shape, or form. In addition to that, it's funny. Last week, all the way through the fact that I knew that I was going to be doing this show on Channel 4, I never thought to ask for 1 minute how many people are actually going to watch the show. Never once, because I was excited. I was like, I'm actually going to be able to get to go into people's houses and actually get into their finances and actually help them. And the sessions that I've run for the couples that we've recorded so far, these sessions have gone on for like 40 minutes, an hour. That has to be condensed down into like a really short, sharp like take for the show, because obviously it's entertainment. I don't know how much of it's going to be kept, but I was more interested in getting in and really helping people from like, this is a practical thing that you do. This is the psychology behind it, because that's what really turns me. That's what really turns me on. It's what made the big difference to me. So I didn't ask how many people watch this. They told me last week, and I had a panic attack because I was thinking, "Oh my god, this is nuts." YouTube I can control. I make a video, I control the content, I control the edit, I can control how good I look based on the information that I put out. This is a completely different ball game. This is edited down, this is put out, and I have no control over it. And over 1 million people are going to watch this program in 3 weeks' time for 4 weeks, and I have zero control. And whilst it's great exposure, I hope that the channel picks up after this. There are no guarantees. I don't know that it will. And so, as a silo, it's been a great experience. I have zero expectation of what is going to happen after this. I would like to think I can do more in the space around talking about money on TV from an expert's point of view, psychology, giving people real like experience in terms of making money relatable and speaking from a human place when it comes to money and finances, and opposed to it's all about the cash, cash, cash. I hope that is the case, but I have no expectations. I'm fully prepared for the fact that because there will be so many people who will watch it, there'll be a portion of people who will just be like, nah, he's an idiot. I don't like him. And there will be other people in another camp who will be like, okay, I get what he's saying. Maybe I want to learn a little bit more. Hopefully things pick up. But at the same time, I'm not expecting anything. But what I do know is, because of the workload and everything that's gone into this, 2 videos a week, I have to pivot. I have to find more time for myself. Like, I'm knackered right now. I've been at home for 2 days this week. I've slept very, 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 very little. I thought I was busy before. It just highlighted that I put a lot on myself to be able to deliver stuff here on YouTube. And I have to find a way to get the balance right in terms of content and actually creating something that I'm actually going to enjoy as well. And that's always been the challenge. Creating the content that I enjoy that is still informative. I don't know if it's going to work or not. I have no idea, but we will see. PM's here. Oh, good. Edna, you're negative for COVID, which is good. Thank you. Matrix NFTs. Listen, I've still got mine. I red pilled 2 of them. I've still got 2 of them that I've not peeled. So I think because the movie did so badly, I don't think there's going to be anything that happens with the NFTs. But then I didn't buy the NFT to make money from it. I just wanted to have the experience. I've not even gone through any of the levels just yet. I've not logged into my Nifty account for, it feels like 2 months or 2 months at least now. So I need to kind of like get into the game and see what the challenges are, because that's what I was really, really interested in. What are the challenges going to be? A bit of entertainment, that kind of stuff. But yeah, I don't know what the NFTs are saying or doing on the marketplace right now, because I've not really been paying that much attention to it. Can I pick your brains on free trade? Of course you can. I have an ISA with them, and they're going to lend out 1 shares. We've got to agree to buy by June 1st. I'd just like to know your thoughts on this before I agree. You know what? I've not made a video on it. This is the thing though, right? So, all right. They're a little bit naughty because they're already charging you $3.99 to have an ISA account with them. It's not like they're doing this completely for free. Now, I understand that the business needs to make money, and then them lending out your shares is a way for them to increase their, I guess, their profit, right? I completely and utterly get that. But they're charging you $3.99 for the ISA wrapper anyway. So effectively what they're doing is they're doing what all of them do. They're doing what Trading 212 do. and effectively doing the same thing whilst charging you for the privilege of it anyway. I personally, and this isn't saying you should go and do this, I personally don't use them for ISAs. I don't. Um, and the idea of them lending out your shares, look, it's their T's and C's. If you want to use them, you've got to agree to them. You don't have a choice. Effectively, you just got to ask yourself: are you happy with someone actually making money on your money? Banks do it all the time, but this is a little bit different. They're charging you $3.99 anyway for the ISA wrapper. So are they getting a little bit greedy? I don't know. Some people will say that they are. I don't like it personally. That's my personal thoughts. But mate, you've got to decide whether you're happy with it or not. There'll be a lot of people who will read it and be like, oh, we're not happy, but we'll stay. And that's completely fine. You've just got to come to your own determination, pal. And thanks for your transfer. Aren't we all, it's at least a good part of us wanting to be sponsored? I know I would. You're doing what you do for all the great reasons. No, appreciate that. Appreciate it. What would the program be called? The program is going to be called, the one that I'm filming right now is Secret Spenders. 1 second. Oh, okay. Sorry, mate. I've just had an email, a text come through for a load of stuff that we need for. Okay, cool. That's good. It's Secret Spenders. It's gonna be in Channel 4. I don't know what the dates are gonna be just yet in terms of its release, but it will be out in April. Apparently. But like I said, I've got a BTS, I've got a behind the scenes video, which I'm going to show to the Discord group first before it goes onto the channel here. But it will be around about the time when maybe the first episode goes out, roughly. It's been so much fun. It really, really has. I can't complain. I mean, it's been a long like day in terms of driving there, getting there, preparing, all that kind of stuff. But it's been so fun to do. Really, really fun to do. And the crew have been absolutely amazing. And I'm told I'm really, really lucky because not all crews are like this. There's just a really great core of people behind that show that just make it all just they're amazing. They really, really are. Hopefully there's a season 3 and I get to do a season 3, but nothing's guaranteed in this world just yet. So who knows? If inflation reaches 10% at the end of the year, what can we do? Savings accounts with 1% interest rates won't save us. Listen, they're not going to save us right now. If inflation gets to 10%, you're not going to have a savings account that is going to get you to 10%. You're just not. And even if the bank rate does increase to like 2-3%, we're still going to be way behind. Now, the painful thing is that unfortunately, there is nothing that you can do aside from put it in the market. But the markets are volatile because of inflation and the monetary policy situation. Then Ukraine and Russia. So there's a lot of uncertainty in the markets right now. So I'm just saying to people, if you are invested or you are investing right now, try to understand what's happening from a fundamental point of view. What can you expect from the market? Because the more prepared you are, when something happens, you're not going to be surprised. And based on your understanding, you should take very important decisions based on those things. Yes, situations like this means that there are opportunities, but can you spot the opportunity? Are you positioned well enough to be able to take advantage of the opportunity? That is the $1,000,000 question. Nobody knows these things. If I had a DeLorean outside right now, I'd be able to tell you, like, listen, this is where you put the money, this is the timing to do it. But nobody has a DeLorean, nobody has a sports almanac. So understand the situation. I mean, my video on Tuesday, right? Was it Tuesday or Friday? When did I post that video? Let me have a look. I normally know what videos I post, right? Because I've been so busy, I don't even know what videos I post. So the video on Friday, how to invest like a pro, 6 pro tips, right? That video right there, given what's going on right now, you would think that people would be interested. But I actually mentioned, 6 key things that are so important right now, understanding what's going on. That video, barely watched in comparison to the other stuff in there, because I'm trying to talk about things from like, what do you need to know right now? So look, inflation is inflation. We cannot control any of that stuff. The bank rate being where it is and where it's going to go, we cannot control any of that stuff. The important thing is that if you do have cash right now, the conversation about risk versus reward, it's so important. People will fall into the age old trap of chasing higher returns because the circumstances, inflation, market volatility, low interest rates, they're all picking up. So you almost feel as though you have to do something to make your money work harder. That isn't 100% true 100% of the time. You don't have to follow the crowd. You have to really understand, what is it all about for you, and make a decision based on you. If it means you've got to go sit it in premium bonds or whatever, go sit it in there. Don't take undue risk or feel that you need to take undue risk now because inflation could be 10% at the end of the year. It's really, really important. Don't get carried away with some of the news. You've got to, think about back to the basics. Like, what do you want? What are you prepared to risk? What are you prepared to lose? And make your decision based on that. But it's a very, very difficult time right now, because I'm telling you, things could get even worse. I mean, we don't know how long this whole thing with Russia is going to go on to. I mean, how much is a liter of diesel now? Like, I'm sure someone posted something that was like £2. Like, it could get worse than that. Petrol being at 160. Like, it could get even worse than that. And then you got the price of food and everything going up 10%. I mean, Jesus, I don't even want to think about it, but there you go. This channel will surely pick up in terms of views and subs. Sometimes it takes a little bit of time for YouTube channels to follow up. Let's patiently wait for Pete to continue. It's great content. Thank you, mate. Laura. Thanks for getting up your Sunday time anyway from your family. We all appreciate you and know when you're on TV will be more successful. Thank you very much. Will Ballard. Yeah, I mean, you can't, but the person that you're using can. So the custodians of your ISAs can, because they have the infrastructure to be able to do that. So yeah, a really big revelation, because a lot of people didn't understand that they could do that. Okay, cool. I think I've come to the end of these. What are the examples of such opportunities in volatile times? Mate, listen, we can talk about this all day. But for example, I mentioned one earlier, oil. People thinking that they could go and put a CFD on oil without understanding that they're leveraging. Leveraging the amount that they're putting in and not putting a stop loss on. There are so many opportunities that you can have a look at. If something is falling or rising in value, you can trade that position. The question is, do you know how to trade that position? You could see the price of gold going up and be like, okay, I'm going to place a long on this gold price, ride the wave up. If it goes the opposite way, you lose money. It's all about risk versus reward. How much are you willing to risk to make money? And this is the problem that perpetuates itself on social media. People think more about the gain than they do the risk. Like, if you get your trade wrong and you not hedge your position, right? And you think gold is going to go up tomorrow, so you take the long position and it goes the opposite way when you should have shorted it, lost. And God forbid you forgot to put a stop loss on it, and God forbid that you didn't realize you were leveraging. You really need to know what you're doing. There's lots of opportunities out there, mate. You just need to be able to spot them. And sometimes spotting them isn't enough, because you have to know how to execute those things as well. All right, guys. So, almost an hour and a half. I'm going to go play some. Actually, I can't go and play some Warzone because some information has just come through that I need to have a look at before tomorrow morning. So, I'm going to jump off this right now. I'll see you guys on Tuesday. I have another live on Sunday. I will have a guest with me on Sunday. We're going to be talking about the investment world. I will release a bit more information about that this week. But yeah, next Sunday should be really, really good. I'm looking forward to actually having a thought-provoking, thought leadership type of conversation. that I hope you guys will find really, really, really informative as well. But thank you for being here as you always are. I appreciate you so much. Again, if you've not joined the Discord group, make sure you join the Discord group. We can chat in there. I posted a, and actually, no. If you're not in there, you're not in there. Once you're in there, you'll be able to see it. Catch you in a bit. Cheers. Bye.